Hello there. I'm Michael Graham, the president of Midwestern Securities, and welcome to this episode of Banking on Growth. As you know, Midwestern Securities is a broker-dealer and registered investment advisor that works primarily with community banks, helping them build successful, profitable, compliant retail investment services divisions inside of their community banks to help the community banks drive non-interest income and provide a value-added service to the customers in the community banks. As part of that function and part of working with community banks that we work with in Illinois, Indiana, Missouri, and Kentucky, we need to be close to the folks who are close to community banks, who are advocates for community banks. So that means being involved with the trade groups and associations. So we're involved with different bank associations, one of which is the Kentucky Bankers Association. And we're thankful to be here today with Mr. Ballard Cassady Jr., who is the president and CEO of the Kentucky Bankers Association. Welcome, Ballard. Thank you for being with us.
Thank you, Mario. I'm tickled to death to be here. Thank you very much. And thank you for all that you do for community banks.
Thank you, sir. Our pleasure. So you have quite an extensive academic and professional resume. Do you mind starting us off with telling us about who you are that really frames how you advocate for community banks?
Well, here we'll stick with the Kentucky Bankers Association. You want to do that? Yeah.
Sure.
Okay. Great. Yeah. The KBA is we're just an advocate group for all the banks in the state of Kentucky, and fortunately for me, is I've been on all three sides of the coin. I was a bank CEO. I was a regulator. Went from that to the Kentucky Bankers Association. And so we are, as you mentioned in your opening, we're an advocate group for all the banks in Kentucky for services and their needs, to try to fill all of their needs.
And as we're talking, you just got back from Washington, D.C. on an advocacy trip, which I'm sure there's a lot of things that are front and center on your mind and your heart that you want to talk about. So we've got a few questions that we'll start with, and then we'll, I'm sure, be influenced by your experience this week, and then we can take this discussion in different directions as well, if that's okay, Ballard.
That'd be wonderful, but I hope my answers aren't influenced by my experience in Washington.
Okay. All right. In the trenches. So first question for you is maybe out of D.C. back to Main Street. It's not necessarily out of D.C. It can be D.C. It can be Main Street. What is the biggest challenge facing community banks today, and how does the Kentucky Bankers Association help the community bankers?
Well, that's a great question, and I wish there was a singular answer I could give you for that. When you talk to community bankers, having just come from Washington, they'll tell you that any bank under $10 billion is a community bank. And then we have banks here in the state that are $100 billion, as you might imagine. And so there's even between that 100 million and that 10 billion, there is a diverse need, as you know, because of all the work you all do with the banking system and the community banks. But when I ask that question of our bankers, I think probably the hardest question we get today, I think, is personnel. It's trying to find, train, and maintain good personnel and good staff, especially in rural parts of Kentucky or rural parts of any part of the country, I'm sure. It's hard to find people who are interested in coming into banking today for several reasons, some of which we were in Washington talking about this week. But, there's also, things that are happening that are cyclical right now, like net interest margins are getting squeezed right now because of the economy, inflation, things that are going on. But I think, Michael, I'd have to say that if I had to pick one thing, I would pick personnel. It's tough.
Interesting. So I think that's an American problem, right?
It's-
Across all industries. And do you see that being any different across size of banks, though? Do you see that's a small bank problem and a big bank problem as well?
Uh, yes and no. I think it's hard for all banks, to be honest with you, just because right now, it seems as if Washington is really in attack mode, if you will, on the industry, and whether it's the banking industry or in your industry, the SEC, for example, it's extreme. It's interesting to watch what's going on, and they're in attack mode, and so a lot of young people that would be perfect for our industry just don't want to get wrapped up in all that red tape and compliance. They want someplace where they feel more free, skill set that they have.
Mm-hmm.
And so, if I were to say yes, it's harder in the rural parts
Mm-hmm.
of the country to find people because of the size of the communities. And the
Sure.
larger the bank, the more you can pay, the more access you have, the larger the cities, and so forth. So that would be my answer to that. I just think it's extremely hard in the rural parts.
That's a very thoughtful response, and we see it as well. Hiring, talent acquisition, talent development, talent retention is a very challenging thing in community banks for all roles. We see it as well. We work in markets that are Metro St. Louis markets to Table Grove, Illinois, who was on one of our podcasts. That's a town of 400 people that has a very successful bank and a very successful investment services division. So we're everything in between. We work with community banks from as low as $40 or $50 million in deposits. So we're right there in those small towns trying to identify people that are honest, coachable, good communicators, willing to work hard, and they want a path. So we spend a lot of time working with the community bank to do those things, to identify, to nurture, and then to make sure that the program is successful and exciting, so that we can be adding value to the community. Working for the community bank should be one of the most prestigious positions in their community, and it should provide a high degree of influence and the ability to make impact on people's lives. We spend when we're trying to do that, when we're trying to identify talent and then coach and develop that talent, and then build these programs so that they are successful and they are careers that the people want to stay in their community with. It takes a lot of effort. We remotely, being in central Illinois, we will get a database and we'll call people that are maybe potential career changers. We'll run ads for career changers. We'll call people that are have securities licenses within certain area codes or zip codes. We'll engage a headhunter to try to call and identify people that could be very successful in the financial services industry. It takes a ton of effort, time, and all of that's money, right?
Right.
A lot of times what we'll do also, though, is we'll start with the community bank and say, who do you know? And this really needs to start with leadership, and it needs to start in the boardroom. Who do you know that you want to bring back home?
Right.
Who do you know that wanted to go to the big city, but now they're married and have kids and want to come back home to be around family for all of those benefits of being in a small community and being near family? And then we'll also say, who do you know that's a great coach? Who do you know that's in seat sales, right? Who do you know that you'd love to get on your team? And a lot of what we get back is what I might call stinking thinking, right? We could never get them. They'd never be interested in us. And so we have to kind of overcome that with community bankers let them tell you no. Don't say no for them. Recruiting and development of human resources has to be a team sport. Do you see any best practices in the community banks that is, kind of an epiphany moment of they're really nailing it? We need to share what this community bank is doing to recruit, because nobody else has thought of this, or this particular bank is doing it better than others.
Well, first of all, thank you, because without vendors like you guys, banks would not stand a chance. Community banking would not stand a chance. But to answer your question directly, yes, and we've actually put in a couple of different types of programs. We have partnerships with one of the local universities here in Kentucky that finally put in a major for banking, which is the first one in the country that I'm aware of at Eastern Kentucky University. We also use what's called our Emerging Leaders program, but now that is a program that's for young people that are already there, and so it's really designed to tell the banker, look, you need to find a couple. You've got some people there, so find one or two or three that you think you want to develop into leadership positions. Let us help. And then we will put them in the Emerging Leader Program. We take them with us. We had 11 with us in Washington this past week. So it was crucial to have them there. It's the first time they'd ever been in front of Congress, or they had ever been in front of the regulators to talk face to face with someone like Rohit Chopra, the head of the CFPB. Is quite an experience if you've never done it before.
Right. That's something they'll remember forever.
Oh, they loved it. We have intern programs. We have a lot of. We're always getting calls from people that have, some students really, that have an interest in intern programs. We're always getting calls from banks that want to do the reverse. They want us to go out and try to find some interns for them to bring them in. And so we turn to the universities there. We've got some good relationships doing that as well. And it's just, it's all part of a package, if you will, that you just have to keep digging. As you said, you call it, what would you call it? Stinking thinking, I think.
Right.
A lot of times we call it majoring in minors.
Right.
Right. And so it's we're out trying our best to make sure that we can cultivate some talent to put in front of these people. And then the idea then is to make the industry attractive enough to make it something that they want to do. Because, for every 3 you get in, 2 might say, this is a little heavy-handed, got a lot of government in it, got a lot of compliance in it. I would rather go, into some other area where I feel a little freer to do things. So it's making the industry interesting as you can, and that's part of our job is to help our banks do that.
Yeah, great, excellent, thank you. What did you share with the folks in DC of what they could do to help the community bankers in Kentucky and the Midwest in general?
We asked them to take a long cruise, not come back for 4 or 5 years, and everything would be much better.
Right.
We're always talking with the regulators. In some years, in some terms, I hate to say the old expressions, but elections do matter, mm-hmm. And you get what you tolerate, basically. And so we try to pass on to our young people and also to our bankers. Don't use your voice. Don't sit there and be angry and be upset over a piece of compliance or a regulation that's been put in that is just, in your opinion, witless. It's, mm-hmm. for lack of a better phrase. Stand up talk and let them know what it's doing, to let them have the anecdotal information of how it affects you, your customers, and your community. And that's what they really need, because what you have in Washington, as you know, is you have a bunch of people who think they understand what you do for a living,
Mm-hmm.
read about what you do for a living, but they have never operationally been involved in what you do.
Mm-hmm.
And so when they're trying to write guidelines and rules and regulations around that, it's important that they have personal experience. And only the bankers can give them that, and only your customers can give them that. I wish I could get a plane full of bank customers that are angry over having to answer, 50 questions on Form 1071 in order to get a loan. I wish I could put people on there that are angry over having to jump through so many hoops to get a small business started. So I'd like to put them all on a plane and take them with me, but they don't have the time. And what we have to do as an industry is to go up there and do that for them, take those stories to Congress.
Mm-hmm.
That's what we were doing this week. Our congressional delegation is very understanding. We've got a great relationship with them, both sides of the aisle. The regulatory agencies is a different story. The regulatory agencies right now are they're leaning as if banks are financial institutions, whether it's your business or the banking business, or is not. They're not good for the consumer, and success might be a little bad right now. I don't want to get too political in my conversations, but there's a distinct attitude that you cannot displace a consumer's mistake or a consumer's problem onto the industry all the time.
Mm-hmm.
Sometimes the consumer has to take blame for it.
Sure.
If they make a bad decision, then they've made a bad decision. We live in a free society, right? And in a free society, you're free to make mistakes, and you're also free to learn from those mistakes. And the way you learn is through consequences. And it's no different than when we were growing up, right? You make bad consequences. Well, it's the same in business. And when the government displaces those consequences from the consumer over to the business, whether it be banking or securities or whatever the case may be, then they're in essence telling the consumer, don't let it bother you, do more of it, because there's no consequences to your actions.
Mm-hmm.
And so there's a fatal flaw in the thinking that's going on up there right now, and that is that we're responsible for every bad decision that a consumer can make.
Yeah, interesting. Thank you. So you're getting to some really important points. We have a saying, and I just used it in a meeting this morning, that you have to fight for altitude.
Yes.
You're climbing in the Rocky Mountains, and it takes a whole lot more energy to go up than it does to go down. And once you start going down and you realize you went down too far, you have to burn lots of calories to get back up, and you have to fight for that. So once you get high elevation, you've got to fight to maintain it. It takes intentionality. It takes hard work. It takes effort. In community banking, we see two types of community banks, and the ones who are intentional and want to fight for it, and the ones who aren't and are tired, are burnt by regulation, and they're being acquired. They're being rolled up by the bigger banks. We hate to see that. We love having more customer choice in the marketplace. We love having more decisions locally, closer to the consumer. where we believe that they can help the consumer better because they're closer to them and they know their needs, and they're able to manage their risks better by knowing their customers. But that, a lot of that's going away with these roll-ups of these banks that maybe aren't willing to fight for that altitude. So we need encouragement from organizations like your organization to educate them and say, you're not in this alone. There's a whole team of us. We can all fight together. We can fight for our industry. But you've pointed out a couple of interesting challenges, right? Hiring is a challenge. Regulatory burdens are challenges. Are there any other significant challenges that you see facing the bankers and that the KBA or other bank associations are helping with?
Well, we were talking about the economy, inflation, the things that are going on, that are more cyclical, I would guess, than they are permanent, I hope. And so there's a lot of that happening. Our banks tend, as you mentioned in your comments, our community banks especially, they tend to know they don't fly at 30,000 feet. And I appreciate your comment about altitude. You're exactly right. You have to fight for it. But I'm also reminded that a lot of banks are flying at 30,000 feet, and they're trying to keep Main Street down here happy, and they really don't know what's going on. The majority of our banks, the majority of banks in the country, are smaller community banks, and they all try. Don't get me wrong. I think they all try to do a good job. But our community bankers, as I always tell our congressional members, they go to church with their customers. They're sitting in church next to about 25% of their customer base every Sunday. They're going to basketball games. They're going to baseball games with their kids together. They're in the Cub Scouts together. That you can't escape that. And that means you have to be invested in your community, and you have to be invested in your community. That's something that we see that community banks do very well. Some banks are having a very difficult time getting done. There's all kinds of challenges around. We mentioned things like the net interest margin that's going on right now. We've mentioned technology, trying to keep up with all the technology changes that you need. Right now with 1071, the compliance out of the Dodd-Frank bill coming out, that has potentially, and we did this the other day just for the heck of it. We decided that we were going to answer no to every question to see how many questions you had to answer. And it could come to 81 questions before you even get a chance to sit down with your customer and talk about what their needs are and why they're in their office. And so you're fighting those kinds of things daily, and it can get very, very frustrating. And as you said, there are people that are so frustrated that all they want is out. And then there's people who are dogged and determined, and they're going to get past this. And with help like people from people like you, they can get past some of this stuff.
Yeah. Well, together, right, we can help provide some of that distance and expertise to help provide leadership and to provide strength to fight off those bad pressures that are in the economy or the regulatory environment, and then also give them leadership and ideas to make their bank more profitable, to drive revenue, and to meet customer needs in the future. Do you have a sense of what community bank products and services, if you had a crystal ball or just a great imagination, what that would look like in 10 years versus today in a typical community bank?
Well, I've got one, and I won't tell you which one it is. I've probably got a better imagination than I do a crystal ball. But one of the things that concerns a lot of our bankers when we talk, and we have monthly meetings, which we can get into in a minute. I'll tell you about how we work with de novo banks, for example, but we have monthly meetings with community bankers, and one of the concerns is the face-to-face time. There's fintechs out there. There's the non-financial groups out there. There is the technology is getting to the point where you have mobile money, which is, and I think, to be honest with you, I think mobile money was impacted when Silicon Valley Bank had their problems. I don't think even the Fed realized how fast it is moving today with your cell phone. And so the face-to-face time is something that I think really worries our community banks. That's what separates them from everybody else. And as we start dealing with younger and younger people and younger customers, they want to get on that cell phone. I know my children, that I don't know that any of my children go in a branch or go in the bank for that matter. They keep wanting to Venmo me stuff or something like that. And I'm going, no, I need a check. I want to see a check.
Right.
But I would say face-to-face time. If I have to pick one thing, that's the thing that's going to concern our bankers.
Is making sure that they maintain that face-to-face time. Yeah.
How do we do that? I know we're going to be talking to them. The bank is going to be talking to the customer all day. But that actual face-to-face connection, where you put a face with a comment or a name, it's hard to do. I mean, I'd heard of you before. I've heard what you all have done before. I'd never seen you before today.
Right.
I'm now able to put a face to the name, and when your name comes up, I'll visualize that. But that's the thing that concerns our community banks right now, I think.
Sure. That's interesting. Yes, we talk with our financial advisors about the best way to communicate is face-to-face. Get all of the nonverbal cues. Understand more. Second best is over the phone. The third is email, and they decline from there. However, our advisors and many professionals under age 35 would rather send an email instead of pick up the phone. And the most powerful tool that community banks have is their relationship and the ability to know their customers. And it's the most important tool from a compliance perspective as well as a revenue perspective. So you need to systematize the commoditized, right? As the saying goes, I didn't make that up. I heard that. Systematize the commoditized.
I'll give you credit for it.
All right. And then the things that you can do exemplary, that's a huge differentiator. You need to humanize, and you need to have opportunities to have those face-to-face interactions. I totally agree. I like what you're saying.
I would add this. If I don't mean to interrupt you, but what you're saying is right on target with what we're hearing, and the people we have maybe 4,700, give or take a few, banks in the country left, and there was 12,000 when I got into this business, and so we're still a very robust industry, and the United States is the only place you'll find 4,700 banks. You go anywhere else in the world, you will not find but a handful of banks in these other countries. And so I'm not sure that some of our younger people understand the importance of how important it is to have that local financial institution, bank, credit union, whatever it is that you're dealing with, how important that is to your community to help support not only your financial needs, but everything that's going on in the community. And I'm not sure they appreciate that yet. I think they will, but I'm not yet, I don't think.
Let me share two quick stories with you, and I'm not sure what we learn from these or what it gets us thinking about or talking about, but I've got a 19-year-old son, and he's an avid snowboarder, skier, and he's an incoming freshman in college.
And a handsome young man. I can see his picture behind you.
Yeah, exactly. That's him. Right. We were at a snowboard shop, and he wanted to buy a new snowboard. And he's a hard worker, an entrepreneurial. He's always worked mowing lawns, working at a butcher shop, selling firewood. He's willing to work hard, and he thinks like a business owner. He's thoughtful with how he interacts. He's a good communicator. But it's a different generation, right? So we're in the snowboard shop. He's looking at snowboards, and next thing I know, he's sitting in a chair in the corner on his phone. And I said, "What are you doing? Are you done? Are we ready to leave this shop?" Or he said, "No, Dad, I'm selling my stocks, and I'm transferring them to my bank account, and I'm going to go up and buy the snowboard with the proceeds of my Microsoft sale or my Lockheed Martin sale." Seriously, right. This is a true story. This is a discussion that we've just had. Yeah, and it's all right. I run a broker dealer and a registered investment advisor, and he's doing this on his phone with a different firm because it's cheap, and they've marketed to kids and small accounts, and so he did that, and we talked about it after the fact, and then the second story I want to share with you, Ballard. One of his buddies, another hardworking young man, called me about 7 a.m. a couple of Saturdays ago and said, "Hey, can I come over and can I visit with you?" And he and I have a good relationship, and it's kind of a mentor relationship. And we talk business and we talk school and things like that. And he's a hardworking young man. He's not on the college path. He's working. Anyways, not on the college path, but he's working at a good paying job and has a great career path here in Central Illinois. But he wants to start his own business someday, and he wants to buy a trailer that he can start hauling things and moonlight and make some more money on the side. And he went to one of these, very large institutions and wanted to borrow money. They wanted to loan him money. It's a $4,000 loan, Ballard, to buy a $6,000 trailer. And he's 18 years old. He's a hard worker and making plenty of money, and they're going to charge him 22% to borrow this $4,000 so he can buy this trailer and make some money on nights and weekends. Anyway, so to your point, he said, "Hey, will you co-sign this?" And I said, "Here's what I want you to do first. I want you to go to the community bank that's up the road from our house. I want you to ask for this loan officer. I want you to tell him that I told you to come in, and I want you to establish a relationship with this loan officer. I said, I want you to open an account there, and these folks are going to know who you are. They're going to be more vested in you. And as you grow and as you mature, when your trailer turns into a $200,000 tractor ask, you're going to be grateful that you're not involved in some large institutions check the box. All that matters is how the boxes are checked in their loan department and in the state next to us. How important it is to have the relationship that community banks can bring to you. So I share both of those stories with you. And I guess I'll share my thoughts and then ask yours. But I think that for those young individuals, that they're going to be very successful someday. They're going to be ideal clients someday. I believe that they get the human element, they get the importance of it, but I think that they have to maybe build some confidence in themselves, and they have to get to a point of complexity where they don't want to make a mistake. Maybe they're not worried about making a mistake on a stock sale to buy a snowboard. But when you talk about a mortgage on your home, or an expansion of your farm, or a small business loan to buy a tractor, or a 401k rollover, I think there gets to be a point of seriousness and complexity. And at that point, that generation is going to want that human element and want that community financial institution to provide them leadership and support. What are your thoughts about that?
I am hoping that you're 100% right. I really am. And I'm also hoping that the complexity of being a bank is not so draconian by that point in time that we're down to 2,000 banks.
Right.
So that every community can have access to some kind of financial services. And that's so important to every community. You tell that story, and I could hear a story here in Kentucky with a company that started probably 30 years ago with a guy asking for a $10,000 loan for a used pickup truck and a shovel, basically. Mm-hmm. And he answered an ad in the post office on the billboard that said, we're doing an RFP for fixing railroad crossings in this community. So, we have to do this publicly, so submit a bid. Well, he submitted a bid, and he did such a good job that the railroad came back to him and said, we'd like for you to do all of our railroad crossings.
Uh-huh.
And he turned to a local banker, and the local banker was the guy who had loaned him the money for the pickup truck and the shovel.
Uh-huh.
Today, that company has a $165 million line of credit.
Wow.
Give you an idea of how big they've grown.
Right.
And I sat down and did an interview, and I hope I'm not dragging on too long here, but
it's good.
I sat down and did an interview with the gentleman. He unfortunately has passed away, but before he passed away, we did an interview, and I said, why have you gotten so huge and stuck with this local community bank? Who can't possibly put together the line of credit that you need and has to correspond it out. That has to put 10, 15 banks together to get what you want. Why have you stuck with him? And he told one of the funniest stories I've ever heard. He laughed, and he said, as we grew, he said, I got a call from one of the largest banks in the country. And it was from the chairman of the board. And he said, I was so excited. I'd never had anybody like that call me before. And he said, we'd like to come and take you to lunch. And we'd like to talk to you about your business. And he said, what about it? And he said, well, we think your local bank is charging you too much money for a company like yours. And we think we can give you a much better rate on your loan and on your line. And we'd like to come talk to you. And he said, well, let me call my local banker and see what day he's got available, and we'll go have lunch. And the chairman said, I don't think you understand what it is we're trying to do. And the gentleman said, oh, I understand what you're trying to do, but it's not going to happen. I would appreciate you telling my local banker he's charging me too much, though.
I love it.
And, it's those kinds of stories is what makes community banking so vital to the young man you're talking about.
Right.
If he can make that relationship and have somebody standing beside him, and no matter what hoops they have to jump through, they will to help them, because those kinds of relationships are so rare today that a bank will do just about anything to maintain those and to keep those.
Mm-hmm.
Yeah. You're 100% right. I'm hoping that this younger generation gets their head out of the phones and gets face to face, if you will, and start those transactions that way.
I am too. And I think that a lot of them will. One more line of questioning here, kind of along the line of how do we get those people engaged? Are you seeing any business lines that are particularly value additive that can bring traffic into the bank and provide other financial services solutions? Are you seeing much traction in those in Kentucky?
Yeah, well, that covers a lot of ground.
It does.
And I notice that we have a lot of banks now that are starting to, because of what we've just been talking about, with so many people with their head in the phone, a lot of banks are building relationships with fintechs. And they're building those relationships for those smaller loans that can be done quick and fast, and zip, and you're done, and you're on the phone and you're gone. I, you know how I feel about that. I think I know how you feel about that. I wish we didn't have to do that, but it seems like that's what this group wants, and so that's what we have to we have to cater to. I think banks are excellent at catering to what their customers want and need. And it's just a matter of them letting them know. Does that make sense?
Mm-hmm.
I think it's a matter for you talking about your son, you're talking about your neighbor. I think it's just a matter of them going in and sitting down and saying, this is what I need. How can you help me? And
Sure.
9 times out of 10, if not 10 times out of 10, the banker will say, well, I don't know if I can do that here, but I can get the SBA involved. I can get a grant over here for this. I can do this, and we can work something out and try to get you taken care of.
Mm-hmm.
That's the thing that it's the human element. And I know what you're looking for is you're looking for the answer of give me a product that will expand, but I still say it's that face to face that's going to expand those relationships more than anything else.
I completely agree. We really do. We do, and I think that there's certain paths to get more of that human element. And for example, wealth management. How do we get folks like my son, who had that, the snowboard story? How do we get him engaged with a financial advisor in that community? If that community bank doesn't provide that,
Right.
then he's not going to have that solution. If it's not an option, it's just not an option. Same thing with like taxes, right? Community banks could own an accounting firm, for example, and maybe that's a gateway to their banking relationship. Do you see much traction or thinking like that in community banks?
Oh yeah, every day. I can remember when I was in banking, and that's been a long, long time ago, before your son was even a gleam in your eye.
Sure.
Yeah. I tried to get a broker in your business to come into our bank a half a day a week, and I said, if you'll come in, I'll provide you with an office, and I'll drive people to you.
Yes.
And because I wanted my bank customers to have access to that availability of that service. I couldn't afford that service. As a banker, I couldn't afford to go out and put that together myself. So then, now we've got a vendor like you that can provide that service. And so those are going to be so crucial to learn to aggregate, if you will, all the people out there that, like you, that are providing a service that we know is needed, and provide those and get those to our bankers. They're not going to be able to do those on their own. They can't afford it. So it's much better for an association, an advocate group like ourselves, to work out a relationship with somebody like you and say, okay, now here's an opportunity for you, and it's not going to be expensive, and you can now bring this to your customer. And you don't have to worry about them stealing your customer. There's going to be a firewall here, and this is it's all going to work out good. And that's becoming more and more. That's becoming a pattern for survivability, if you will.
Interesting. Thank you. So I'm a firm believer that business associations, trade groups, chambers of commerce, etc., that at their core, they need to provide at least two things: networking opportunities to learn and share, with your peers, and business advocacy. And if you're not doing at least those two, in my opinion, it's not worth the dues.
Absolutely.
And it sounds like you are so committed and so passionate about doing both of those. I think that's fantastic, and I think that your members certainly have a great, powerful organization there to be speaking with them, listening to them, and speaking for them in DC. Tons of knowledge, and just as importantly, tons of heart coming from you, Ballard, in your leadership of these discussions, these topics, and that organization.
Well, I appreciate that a lot. We talked a little bit earlier about how we're getting these bankers together. I'll give you a great example of we had a banker start a de novo bank, believe it or not. A de novo actually started. I think they turned 23 this year. He decided that what he needed was advice from other de novo banks, from other small banks. And so he came to us and laid that on the table. And what we were able to do was put together a group, and we have done it now every month. They meet. We have a different vendor come in every month that presents them with an opportunity. And then we come in and talk to them about advocacy on the government relations side. And then they meet amongst themselves about problems that they're having. And how do you overcome these? And we've got this concern or that concern. And you've got somebody sitting across the table from you. So, well, I had the same one. Let me tell you what I did. Mm-hmm. And they're not scared to do that. They're not. It's something that when I was in banking, they were scared to do that. Yeah, we wouldn't sit in a room full of other bankers and tell you what we were doing. We didn't want you to know.
Sure.
Sure. And that's all changed. So,
that's powerful.
These guys they meet monthly, and I can't believe that it's still going on, and we love it. We absolutely love it. And it's a different crowd, it grows, and different people come in and out, but the same guy that started, it's there every meeting.
Yeah, that's awesome. Awesome. Well, you're doing a great job, and we're very thankful for you and for our partnership with the Kentucky Bankers Association. And thank you for joining us on this version of Banking on Growth. We appreciate you being with us.
It's been my pleasure. I've really enjoyed it, and I can't thank you enough for the services that you provide to our bank. And it's a wonderful relationship. We want to keep it, and so you let us know what we can do to help you all grow and expand yourselves as well.
Awesome. Well, thank you very much. The feeling is mutual, and we look forward to our partnership continuing in the future here.
Thank you, Michael.
All right. Thank you, Ballard.